So now the topic for panel discussion is small ticket lending, credit score for farmers and traders. For this panel discussion, ladies and gentlemen, please join me to welcome on stage the moderator of this session, Mr. Timmana Gouda D, founder, CEO, and MD, WhatsLoan. Can you please put our hands together? And now I'd like to invite our esteemed speakers for this session, starting from Mr. Matthew Gamser, CEO, SME Finance Forum IFC. Mr. Arjun Ahluwalia, co-founder and CEO, Kisan. Mr. Amit Arora, Rural Development Finance, the World Bank Group. Can you please put our hands together? Mr. Vivek Tiwari, founder and CEO, SATYA MicroCapital. Mr. Yatir Zaluski, CEO, ConfirmU. So I think it's going to be a blockbuster session, ladies and gentlemen. So please keep your questions ready. If time permits, we'll take some. So I'll hand it over to the moderator. Thank you.
Yeah, I think thank you. We are quite intimidated with the crowd that we have. It looks like there's a lot of interest on the agri side and agri-credit side. I'm Timmana, career banker. I'm a Fintech founder. And my company also does agri-Fintech, so I'm a little relevant, not as much as these guys are. They're very experts in their own area. Yeah, I'm going to start with, we have it's not small ticket anymore in India. Agri-credit is decent size. An average ticket size is 1 lakh if you take the Kisan credit card as reported by various banks and NABARD and RBI. So we are trying to figure out what is available, what was available 3 years, 5 years back, what is available now, and how are we enabling with the data, technology, banks working with us, and innovators like RBI Innovation Hub, RBI, and NABARD, and all that. I have Matthew. I'm going to ask them to introduce with 30, 60 seconds kind of introduction, so that we will know what are their expertise, and then we will pop our questions. And I'll leave something for the audience to ask your own questions. Matthew, I think I'll request you to start with the introduction.
Thank you. I'll be very brief. I work for the IFC, the private sector arm of the World Bank Group. I run a global network called the SME Finance Forum of institutions that are involved in financing SMEs or in doing technology to help financing SMEs around the world. And our definition of SME, unlike the Indian definition, very much includes small farmers and agribusinesses.
Arjun?
Thank you so much for having us here, and fantastic panel to be on with. I'm Arjun Ahluwalia. I'm the co-founder and CEO of Kisan. We are a fintech platform that's providing financial services for rural businesses and rural individuals alike, largely catering to the farmer sector. So very, very excited and looking forward to this panel discussion and chatting up around how do we analyze this particular target segment and increase financial inclusion for that target segment.
Amit.
Thank you. Amit Arora. I work for the World Bank Group along with Matt, but I focus largely on rural, agri, and gender as the focal area, covering the spectrum, whether it is micro enterprise to microfinance to small and marginal farmers. Happy to be here.
Good morning. I am Vivek Tiwari, MD and CEO SATYA MicroCapital Limited. It's a microfinance company working in 25 states, having a customer base of almost 1.5 million as of now. Our entire experience is working for the marginalized sector section only, working for the people at the base of the pyramid, and almost 1 million families are there which are coming from the farmers family only. So that is.
Thank you, Timmana. I'm delighted to be here. I'm Yatir, leading a startup called ConfirmU, and we're all about enabling lenders the intent to repay of people who don't have any credit history. And we started our mission the agri-lending space actually in Kenya, where we helped farmers lending marketplace to decrease 43% of NPAs of farmers who are applying for cow loans. And ever since then, we're moving also in the Indian market and looking forward for this chat.
Thank you. I'm going to make some statements which are relevant to the question, and then I'm going to lead them to the question. We have 120 million farmers under PM Kisan. That is a direct benefit scheme called PM Kisan. 6,000 rupees delivered to their account. Hence, we have identity established for 120 million plus. These guys have got the Aadhaar. They've got a Jandan account. They've got all the lands connected to that. That's a massive base that we can start with. And this is a DBT, direct benefit transfer. When the government in 2020, called out that how can you saturate this population with a loan so that they get out of the DBT and come into their own being, borrowing and paying back under Kisan credit card. This credit card, Kisan credit card, is about 1998, the NABARD started. It's one of the massively delivered single product anywhere in the world. 22 crore people have benefited out of this product, and without the technology. And that is India for you. Massive network of branches, people being on the last ground, serving these customers. If somebody says it takes a few weeks or 3 months to get this loan, and there, the government is not achieving their targets in the sense 70-80% is the target achievement. What it means is people are not coming to the banks, or if they're going to the banks, they're sent back. In that sense, I want to ask Amit and Matthew, what are the better models? So we are good with identity, we're good with land data, we've connected them sufficiently. What are the credit model or credit scores or that are missing? What you can bring from anywhere in the world that you have seen, which are better when we can, what is missing? The identity is done, data is done, we've organized everything. The credit models that we have at least 40, 50-year-old, nothing has changed. From 1998, I don't see any change. Are there anything that you can suggest, the credit models, credit scoring system, that you can bring about to the audience?
Let me kick off, and then I'll go over to Amit. I'm not going to talk to you much about India because I'm in a room full of Indians, and you know more about the situation here than I do. I will say, though, as an older person who's worked on credit and finance for quite some time, in general, if you talk to an honest financier about financing any small ticket customers, including small businesses, they'll if they're honest, they'll say they've never been very happy dealing with this segment, if they're honest. And that's regardless of what the government policy is about what they have to do. If you ask them about farmers and they're honest, they'll say they're even less happy. Why? Because in addition to all the challenges of getting the right information that you need to properly manage risk with a general enterprise, in agri, you have all these other parameters you have to be on top of. But then was then and now is now, because what we would say to people then is make some partnerships, be at arm's length with this institution, that institution. If they tell you someone's good, then take that recommendation. And that was okay, but it's very expensive to go through that sort of very analog sort of process. Today, with digitalization, not just of finance, but of commerce, of commodities, the Internet of Things is just as important as the Internet of money. And this is enabling us to give a very different recommendation, which is that the best practice is about being a direct part with real-time access to a whole ecosystem of services to the farmer. So just to give you a couple of examples, if I look at, say, Apollo Agriculture in Kenya, they didn't start in finance. They started by using satellites to have real-time knowledge of what was going on small farms and to help the farmers. They diversified into relationships with financiers because they realized that finance was important and they had to add and create a whole ecosystem. Similarly with Coltiva, which started in Indonesia and working in other parts of the world, they also started with more helping farmers run better systems of cultivating crops. And they quickly were able to team up with people who had capital and to put an ecosystem together. So you're providing three things. in the best practice. One is access to finance, but that's along with access to markets, because you need really strong, stable, known market information as a farmer. And finally, you need access to management skills and your own agricultural know-how providers. And that is where, that's the opposite of what we said before. It's where the future lies. And the future, because of India's digitalization, is very high potential, I think, in agri-finance.
Thank you, ma'am. I think you can give an Indian use case.
Yeah, sure, thanks. But if you allow, Timmana, I'll just give a high-level context, Indian, because this generation, the audience that we have by and large would be fintechs, digital lenders, neobankers, and the likes. So priority sector business in India is about 50 lakh crore, if my understanding is correct. Now, that's a huge, huge sum of money. About 20 lakh crore comes from, we can do the maths in dollars later. Yeah, so about 20 lakh crore comes from MSME. So rest 30 lakh crore would be agri plus plus, predominantly agri. Within this, the Kisan credit card, the subject that we will be talking of, is about small and marginal farmer numbers that you said could be anywhere between 13 crores to 15 crores, depending upon the data you're quoting, out of which about 7 crore or so have KCCs. And RBI data shows about 3 to 4 crores are operative, have an outstanding of about 4 lakh crore, if I remember correctly. So the market opportunity is huge, humongous, much more than the entire microfinance space put together. There is such a good market in terms of valuation and so on, so much in the microfinance space, which is not there in the KCC or agri. So we need to crack that problem, and then the market forces take over. So that's the landscape. So even if we take about 7 crores eligible farmers who have some form of land holding, in about 6 lakh villages, we are talking of 100 plus farmers every village with an average loan ticket size of 1.6 lakhs. So that works out the maths at a unit level and an aggregate level, that opportunity is there. Now, since the product design is very age old, how much I can charge, what is the documentation, how this will be calculated, everything is pre-decided. I as a banker don't have any flexibility to do this. So what is my incentive to do this is something that I need to work out, especially when the pricing is also pre-decided. So the margins are fairly thin. It's just because of the priority sector tag that I as a banker need to do this, and I continue to do this. Just like it has happened, my personal take, just like it has happened in the microfinance space, RBI has taken a very bold step, freeing up sudden the regulatory elements and let market decide, because market has matured. Probably that's the direction we need to take. Otherwise, both for the supply side and for the demand side, what is the motivation / incentive is something we have to see. The technology allows a lot of processes to be taken care of using technological tools and friction to be reduced. Currently, the turnaround time of a KCC is very long. I need to provide my land record, apart from my own KYC, a lot of documentation involved, and you have been leading such an experiment where this has become fairly frictionless. So this is a very good opportunity in India. My hope and expectation is at a cusp of a big change. Different data sets can be pulled in from different sites to make this KCC happen in a matter of minutes, while it takes weeks now. So this will reduce a lot of friction, but the challenge here is the banker's ability to absorb these data points, store, analyze, and use these data points. That's a journey which has started, but it needs a lot of investments to upscale the kind of infrastructure that banks are sitting on. Sorry, I'm taking a little long. On the demand side, for a farmer, digitization doesn't matter as on today. There are no incentives and motivation also. The lender gives when lender can give. I may need money when I need to sow, but I may get money when I'm ready to harvest. That problem needs to be sorted out. And once I get it in cash, all my downstream use is in cash. Unless until this part gets incentivized, that I start using the money digitally, it will be a struggle in spite of all the tech stacks that we will build. So that part, if we can crack and we can track the cash flows, we will reach a point which will be close to autopilot, not as the in the previous session we heard, not all of this will get cashless, but this is a space which is a very sunrise sector, a lot of action happening, and India, because of agri-stack, because land record digitization and so on and so forth happening, there is an opportunity like never before to consolidate this and use it. Unlike other countries that you spoke of, it's fairly fragmented and is a lender-led model, localized model. We have, because of our digital public infrastructure, next wave of opportunity coming where we will be actually able to do next generation financial inclusion through this. So that's the context and long answer to your short question.
Yeah, thanks for leading me to the next questions. I think all of you please visit RBI Innovation Hub. When the RBI, the regulator becomes the innovator, there is an answer to that. We have got the KCC, thanks to some of the fintechs, including me. We worked with the RBI Innovation Hub over last September to this September. 2nd September 2022, around this GFF last year, RBI released digital KCC guidelines, and fintechs were able to build along with the banks and RBI Innovation Hub, and today you get the product to see. Please visit the stall. Then that's a good answer to that. India has built DPI, DPGs, which are necessary, and it's just the credit model, which we couldn't touch the credit model in the last 1 year. We will not be, unless the development banker, somebody like Kisan, shows what is the new way of the credit model. Today our lending style is lend and forget it. Either we are happy that he's paying back, or we are disappointed that he's not able to pay. Then this experience of not lending to the small guy is known. Is like satellite data, sir. We have already organized ourselves. We have like 2020 satellite data got opened up. There are 10 companies which are working hard to identify the crop, estimate the income, bring the real-time data of the last 5 years, and giving us enough data to take a quick decision in less than 3 minutes. And we have e-signing of documents, so there is no necessity of visiting, touching, nothing. So I'm going to ask Arjun, who's been in the lending side. He's lending along with our independent of banks. I want to ask him, from a lend and forget it, where are you taking the farmers, working with them, engaging with them, helping them with the inputs, and improving their productivity, and helping them with supply chain side, getting them the better price, because Indian farmer has ensured the food safety security for this country for a long time now. But he doesn't have the income security for his family. He's remained where he was. And there's a lot of pressure on the land. He's sending his children to education to reduce the family burden. He's sending a family member to small business. It could be agri-MSME, or could be just an MSME, where again RBI looks at those things for lending. Where are you placed yourself to work on your own balance sheet, work with the banks on co-lending, and work with the banks for distribution, and be with the farmer? I think you have done an amazing job in the last few years. We have seen you are the leader in that. What are your comments on that to create new models? Asked us to create better credit scores for the farmer and the trader that you are working with already. Your comment.
No, thank you. Thank you for setting that context, Timmana, and I'll try to be concise and slightly more frameworked as I walk you through this. Folks, obviously, when this panel started, we heard about a bunch of solid macro factors which Timmana spoke about. And then Matt said, hey, honestly speaking, folks don't really like lending to this particular space, which is reality, right? And then obviously Amit helped throw some context on what the fundamental gaps are, right? To just kind of summarize those for you. Today, what we understand very, very clearly is that there is an issue in the product design of it, right? And the product design includes a couple of factors, right? One is, how is that particular product structured overall to be given to this particular customer? Two, how is the distribution of this product going to work, right? Digitally, physically, and things like that. Because this is a huge distribution play, as many of you all may have understood from the various kind of facts that were presented as well. Given the amount of KCC that we have disbursed on an annual basis towards this agri piece is as mentioned, between 25 lakh crores to 30 lakh crores. That's a significant amount that is being disbursed today without any sort of digitization that exists in the distribution process. So number 2 is distribution. And number 3 is how do we actually analyze? How do we credit score? How do we kind of evaluate and assess these farmers or these customers to be able to give it back to us, right? And finally, there is this question that, hey, are we doing lending to kind of forget? And then going back to them 1 year later and saying, hey, you took this loan from me. I hope you remember, right, in June of 2021, and I've come back in June of 2022. I didn't care about whether you survived COVID-1, COVID-2, or COVID-3, but can you please repay me this loan, right? I'll just take you back a couple of steps. Today, about 3 kilometers from here is one of the largest slums in Asia. Or many of you must have crossed it as you came down to this location from the airport. There's a phenomena that has taken place there, and in many such areas which were underserved in India. What was that phenomena? That was a phenomena of financial services coming together with commerce. Financial services coming together with commerce. What did that enable? That enabled your maids, your drivers, the people that work for you in that particular segment to be able to walk into a Chroma store, into a Xiaomi store, into an Oppo store, and walk out with a cell phone, with an aqua.
Lend and forget, and I know you are engaging with the customer, and there are fintechs who would be looking at the space. We have spoke about neo-banking, right? There is a KCC gets delivered 1.6 lakh without mortgage, just hypothecation of crops. 1.6 lakhs to 3 lakhs is a sweet spot because that is subsidized interest or no interest. Some interest, some states give the complete interest back to the bank on behalf of the customer, farmer. They say 20% is designated for inputs, 20% for consumption, another 20% for marketing, storage, and all that. Is there a scope? Are you thinking, I think you already have some kata which is relevant. Are you working with a merchant only? Are you working with a farmer to take this and work with the banks and say, okay, end use of funds. End use of the fund, if you can put discipline to that, in all likelihood the money will come back appropriately and you will create a good account because it's a 5-year overdraft account. Kisan credit card is not a credit card. First of all, it's a debit card. It's a loaded, it's wrongly called a credit card. It's a debit card. It's an overdraft limit, right? How do you plan to encourage some youngsters, fintechs, to create a neo-banking for the farmer in his own language, less technology, extreme convenience on his phone, smartphone, feature phone? What are your ideas?
May I just piggyback on that? If you had a digital rupee that you could program, would that help you in this area?
Yeah. No, thank you. And thanks for the follow-up as well. Folks, I think, just transparent communication and engagement is extremely, extremely important when you're dealing with these stakeholders. Because these stakeholders and this target segment has been sold so many things so many times which have just not worked out for them, right? So, in India, we talk a lot about, hey, there is this, deficit with regards to the fact that, hey, Indian customers may see a 50 paisa discount or a 50 rupee discount and they may jump the brand, right? I believe rather than that, there is a trust deficit that exists in rural India. And it takes a lot of time to be able to build that trust with those folks. And to your point with regards to engagement, communication and engagement are extremely key, and they're extremely key at each node of the journey. A is acquisition. It's very, very important to know as to how is this product being sold. Folks, the fundamental problem that we see when, the KCC is sold is in the way it is marketed to the farmer that, hey, this is a product that you can buy, 3-4 years later, the government will change, there may be a loan waiver, you don't need to pay it back. Guys, if my Amex guy told me that I didn't need to pay my Amex card back, why would I pay it back, right? The fellow who's selling it to you is telling you you don't need to pay it back. Now, given that how fragmented it is and how dispersed that entire market is, can you really enforce a way to make sure that these folks are able to sell it in a scripted manner? You cannot. And that is where digitization really, really helps. And then comes the fact that, hey, you've given this person the loan. How do you ensure that you're kind of touching base with them going forward? And that is where the neo-banking pieces come in. What we try to do is we try to open up a savings account for them, right? Which enables us to put an e-mandate and e-natch on them so that we can collect back in a digital manner as well. We try to give a particular percentage of our farmers insurance as well. This is more personal life insurance. Now we are working on various modes of insurance there. So what did we do here? We enabled them to be able to increase their income through credit and increasing their business. We enabled them to be able to save that increased income, and we've enabled them to protect themselves and their income as well. And in addition to that, what we try to do is with the farmer, give them more services around the advisory concepts. We don't build these, we integrate and partner up with folks, right? These are satellite companies. These are companies which provide soil testing services, right? These are companies also who work on the market linkage side, right? And how do the farmers get to access all of these services? Through a simple portal. We have two things, folks. We have one thing called Bharat Khata. It's an application. It is on your Android devices as well. Feel free to download it. It is used by around 50,000 merchants across the country today. These 50,000 merchants use Bharat Khata to be able to onboard. Last year, we onboarded about 8.5 lakh individual farmers through these merchants on Bharat Khata. And this year, we are launching an app for the individual farmer, to your point, to the digital rupee, where they will basically have a limit on their phone. They will be able to walk into a store. They will just be able to scan their phone on the store's barcode and walk out with a product in their hand. And that will also be able to give us a better kind of insight in the farmer and what they are doing through their SMSs, etc. And lastly, what we are working on is to be able to make them aware of what kind of subsidies they are eligible for, and then in the future be able to help them access those subsidies as well. So that is how we try to make sure that on the FS side we are providing a whole suite or whole stack of services, and on the agri side we are trying to, with our partners, provide the right kind of awareness and informative sources for them to be able to make the right decisions and become more productive.
Thank you. Yeah, when I hear the word financial inclusion, I feel, it sounds to me, keep the poor poor so that they can vote for me. It's a social statement. We need credit inclusion. We need wealth inclusion. We have to move him from financial inclusion is just about transacting with him, opening a bank account, and showing him you put the money, not give the money. To you, I want to ask you that, okay, 2012, MFIs got regulated. We thought it is going to restrict that kind of microfinance lending, but actually it's promoted microfinance, and you got the respect as industry. And when you do microfinance, you always touch a farmer, family. If you ask him more questions, he's more permanent. He's got an asset to back. You can go back to his house and land. It won't change like an urbanite. He's not in a rented house. So how do you make the microcredit, MFI, farmer, how do you bring them together to really make this country credit inclusive, not just financial inclusive?
Thank you so much. I think you have touched 2012 when we were, as a sector, we were going by turbulence and new regulations were there. And it was not for to curb out the sector. It was just to regulate the sector, and it has given actually more formalization to the sector. When you go by the development of the sector, I think from 2012 till 2016, we have seen small finance banks are coming in that particular segment. We have seen the universal bank licenses have been given to that particular segment. And it is true that most of our, almost 60%, 65% of our customers, they are having the farmer families, and our loans are agri-allied services are there. Animal husbandry is, I think, that is the largest component of our loan portfolio. And 20, 25 years before, when the microfinance sector started its journey, I think uh, there was an intent from the both the side. We wanted to give them money, and they wanted to repay it back to us. And except that, nothing was common. Means we don't have any technology, we don't have even the KYCs, we don't have any previous history or civil score or something. I think our credit scores were we started generating from 2012 onward only. But the good thing was that as a sector, except three crises, especially one is AP, another is demonetization, and rest is COVID, the sector has maintained almost 98-99% repayment rates. And as of now, means almost 7 crore households are there where we are having our reach and credit access is there to that particular segment. And indirectly means we are financing farmers' families, and these loans are even used for the animal husbandries, and whatever the cash flows are there, they are further used for the agriculture development in their families. The only requirement is that the political imbalance means the announcement from the the politicians, I think sometimes means that becomes very difficult to manage on the ground. We, as a, even when we go in the villages, they want to pay. As Arjun told rightly that if someone who is selling the loans and he is saying that you don't need to repay it, it will be difficult to get it back. But if there is an infrastructure which is being supporting them in the at the time of crisis, where there is a encouragement for the repayments are there, and after supporting them, I think 3-4 years or 5 years, and creating a good credit culture all across the country, I think it is not just a farmer segment. It is required to build in every type of borrowing, where a good credit culture and good credit awareness is required to develop at different levels, and role of financial institutions, government, and everybody is there in creating that ecosystem of repaying the loans. And most of the developed countries, that culture is there. They get their money. It is not because of the follow-up. It is because of the their own credit systems in their countries, and the credit scores are something very important for everybody. In our country, because the topic is like that, the awareness of credit scores and what they will achieve and what they will not be able to achieve, if they are not having a proper credit scores, that is one. And on the other side, if there are delinquencies are there, how they will be dealt and treated, and what they can miss if they are not maintain, if they are in the influence of XYZ in, means those who are already, I have seen in the market that the traditional lenders, they don't want that particular segment to be, they get formal credit directly. Most of the time they influence them to do not pay, so that their records are not in favor of them when they are coming for the next cycle loans or something like that. But this particular segment is credit worthy, and based on our microfinance experience, means with proper product, process, and nowadays technology and data, this segment can be funded, but and repayments are can be maintained good as like microfinance is there. I think we are running out of time, but definitely.
Yeah, there is more to it. Yeah.
Thank you.
Yeah, I think we all represent the ability to pay, but we have never got to the intent to pay as yet in India or anywhere in the world. We have one of the safest banking practices in India, physically, digitally, digitized and all that. I have my question to Yatir. How are you going to help us with intent to pay that you have been doing for consumer anywhere in the world and in India? I know you have a lot of Indian use cases. Can you help us to understand how do you get into the brain, induced intent or original intent? Induced intent is what the statements that come out politically or socially. How can you help us with, how to get the intent to pay and scoring the customer?
Thanks. It's a big challenge. I think we've taken a different approach where we look at people on the human factor. So for us, the first use case was in Kenya and then in India with a microfinance, a large microfinance pilot that we've done in UP and Madhya Pradesh. And what we try to understand from those people is the intent to repay through a series of interactions. And you've spoken a lot about customer onboarding. I think we have a good success use case in Cambodia, actually, with a bank, a microfinance bank, that wanted this not just for reducing NPAs, but wanted this for a new customer onboarding. Because the people there, they said, why should I go in and fill this long form of loan application where I can play a game? I can understand how I have to look after my field, my crop. How can I be prepared, for future floods? And this is another way for a lender to actually look at, is that person aware? Is he minded about, the weather problems that's going to happen? What is his life choice preferences? Is it about education for his kids as top priority versus the cow, the health of the cow? In Kenya, for example, the lender tested how the farmer who was applying for a loan actually selected images of how they treat the cows. If it selected the right thing with like a natural syringe, then he would get a higher score, and vice versa. And I'm trying to say all these transactional behavior are, the best, that traditional lenders are looking at the best models. It's really how to move banks from the traditional thinking. What we offer is an assisted model, is, hey, look at the people, look at how they make choices. It's game theory, it's all about, and other cultural norms. And we have the game for India for farmers, a specific version in 9 vernacular language. And it's all about a farmer who's, going on and buying equipment for the farm and how he nurtures the cows in the field.
I think we run out of time. I instead of me asking the question, I'll open it for 3 questions from the audience. And the fantastic panel, please shoot your questions.
Can I ask questions?
There's one here.
You can stand and speak so that others can speak.
Okay. Hi, good afternoon. My name is Arjun. I wanted to ask you already touched upon how government policies or farm loan waivers impact the curriculum. One more challenge that probably in agri-lending is that the export bans that usually happens and which really impacts the prices for farmers, like these export bans or rice export bans. And that reduces the price by 20% in like 1 hour. So how does technology or can that help? How was Jai Kisan taking into consideration that challenge? Because just before 1 month before ban, we talk about cleaning the entire world, and then there's an export ban. So how?
Keep the question short so that they can answer. I think Arjun, you can take that. Actually.
So I think that one is being able to overcome political risk. That's a tough one, yeah. I've been asked questions around weather risk. I've been asked questions around loan waiver risk. But that is international political risk. That happens very, very rarely, right? What you're talking about probably is inspired from the rice exports ban. That is so that India as a country is protected from any sort of issues with regards to, hunger and things like that. And that's why that commodity for us is very, very important. And that is something that we preserve. I think for us at Jai Kisan, what we really promote is that we diversify our farmers' cropping pattern as much as possible. Right? So any farmer, if they're cropping anywhere between 2 to 4 crops, any sort of export would not significantly affect them because it would be 20-25% of what they're fundamentally cropping. I think that is one way to be able to kind of minimize the risk that you're talking about with regards to one particular commodity, and that commodity pricing can fluctuate because of 100 reasons other than the just export bans as well.
Other could be...
Can answer this when you see multiple countries, what's happening out there?
I wish I could, but one way could be to take an insurance cover. There are solutions available, but though they don't reach the small and marginal farmers. And the other is, through the aggregation models, shift the risk to the collective instead of small and marginal farmers. There, price risks can be handled through insurance and through other models. So that could be one way where, directionally we are moving.
Yeah, can I ask a question? Yeah. Thanks a lot for such an insightful session, sir. So I represent Rural Management Program at Wellington Institute of Management, and I personally teach agriculture economics. The question I always get from the student is, like, the intent of financial services institutes are good, that they want to empower the farmer, but challenge comes when it comes to the crop loan waiver. So whenever anything gets free of cost, it loses its charms. So it's difficult for the financial service institutes to keep themselves sustainable and how to survive. So is there any other way instead the loan waiver to how to make it sustainable?
Political risk, this is same as the...
I think this we should take offline. They're available for next half an hour, 40 minutes. There's a very sensitive, nobody wants to.
Okay, no, I'm talking from the
this question.
no, from the strategies point of view. We cannot, I don't want any comment from the government perspective, but from the strategic point of view, can anything be done to overcome this challenge of loan waiver?
Look, the best you can do, from my experience in
Yeah.
other countries, I don't want to make an opinion about India, is that the more services I'm getting from you, whoever you are, I'm not just getting my financing, you're my key to accessing my markets, you're my key to getting good inputs, you're my key to getting knowledge about how to take better care of my crops. The more that you're able to build that ecosystem, the less I want to fail you in repaying your loan, because I'm not just going to lose the next loan, I'm going to lose all these other valuable things. Now, that's not going to overcome drastic political events, but that's a way in the new type of small farmer finance to diversify your risks and improve your risk management.
That's why we spoke about engagement model, instead
Yes.
of punishing him for
Willful
not
defaulter
paying.
may be reduced if you do that.
Creating a platform to be able to give them all sorts of services. Today, a lot of financial services institutions are partnering with satellite companies. They're partnering with the off-take partners to be able to ensure that, their procurement from the farmers carries on. So that is how, like he mentioned, right, you create an ecosystem overall to be able to serve the farmer. Today, the reason why a farmer repays the retailer is fundamentally because if he doesn't repay or if she doesn't repay the retailer will not sell to them again, right? So how do you kind of block that piece off is the question.
Yeah, okay. Thank you so much.
This is getting moderated. Thanks to the effort of government, thanks to the effort of fintech people, and thanks to even, there are a lot of realization happening even from corporate sector. My question is specifically, lending, availability of loan, it is also now increasingly becoming possible for a farmer. But the challenge seems to be the uncertainty and the growth of income. Having spent in the field, his income is hardly 10K per month. So is there any international model where fintechs have supported the growth of income for the farmer and how it has been done? So if you can share some.
So I think this is what we were driving at. I mean, if you're not just providing the input of the financing, but you're also helping improve the marketing systems, improving the productivity of the field, all these things contribute. But in the past, when we were analog, we just said it's too different. We can't integrate these things. And we were actively discouraging in the ag sector this separation. But then was then, and now is now. We're now in a digital world, and it's digital finance as well as digital things. And digital know-how, digital farming is the future. And therefore, we can make this work, and we can make it come together again, what we've been driving apart in the past.
A large part of the answer to your question revolves around how do you bring formalization to this entire process. See, when a retailer is selling a product to the farmer and they are financing it themselves, they are most incentivized to sell the lowest quality product because they are making the highest margin. Whereas when there is a formal financing available only towards the product, which is the best quality product with the lowest margin, the retailer is forced to sell that product. And in that process, already you've started with the farmer being able to access better inputs, which means they will generate better yield. On the other side, like we were talking about, if you're able to create an ecosystem approach and bring an output player to that equation and get their procurement done irrespective of fluctuations in pricing, you're able to also help them on the output side. So you've solved for the input cost, it's become lower. better brand, giving you better yield, so productivity is better. And then finally, you're being able to sell that at the right price as well, because you have the procurement partner kind of listed. So all of it moves towards the engagement piece and the ecosystem approach that one is able to kind of deliver in comprehension along with other partners to this particular target segment. I think
to add to that, there is need and lot of efforts ongoing to do climate resilient farming. That's a big challenge that raises the question mark about the returns. And micro advisory services, whether it is to improve the soil quality or productivity and so on and so forth. So across states, I see a lot of these initiatives happening. I think it'll take some time. There is trial and error happening, but that's the area one needs to work more in much more focused manner.
Yeah,
I want to add just one line.
We have a short time. I think you can engage. You can talk to them outside. We have a short.
Well, each question actually here is so important, and every question deserves like at least 10 minutes. But right now we are running short of time, so you can take that question like offline.
We are available for some. I thank all the panelists. Some have come down from their countries, and thank you so much. It's very engaging. I think we deserve that 11 minutes extra because this room is a short on the space also. Thank you so much.
Well, of course.